Hi viewers, in this video we are presenting provisions and reserves for the purpose of JAO. So provisions means written off depreciation and assets, and reserves means the amount is reserved for future risks. However, here we are clearly given about provisions and reserves. So first try to understand provisions introduction. There are many risks and uncertainties of or contingencies in the business. In order to save the business from such events, it is necessary to make provisions in every business. Provision is an amount set apart from profits to meet the loss or expenses in future for a specific purpose. Indian Companies Act 1956 defines provisions means any amount written off or retained by way of providing depreciation, renewals, or diminution in value of assets, are retained by providing for any known liability of which the amount cannot be determined with substantial accuracy. From the above definition, it is quite clear that provision is a charge against profit. In each profit and loss account should be debited for this purpose, and the same is created for a known liability as well as known reduction in the value of an asset and which cannot be properly ascertained. It should be compulsorily posted at the debit side of the profit and loss account, whether the firm earns profit or loss. These provisions will be utilized for this purpose. These are first one is for meeting future liabilities or loss. Second one is for strengthening financial position of the company. Third one is for redeeming a liability. Fourth one is for replacing a wasting asset. Fifth one is for meeting expected contingency. These provisions are generally shown at the asset side of the balance sheet by way of deducting it from concerned assets. It may sometimes be shown at the liability side also in each provisions for taxation, etc. So now we are going to discuss about reserves. The firms usually prepare final accounts at the end of the year for ascertainment of profit and to know the financial position of the firm. In order to ascertain net profit for each year, the businessmen need to take into account not only the current contingencies but future contingencies. Also, in fact, reserves and provisions are such considerations which actually relate to the future needs for which a part of the current earnings need to be set aside. These reserves are the amounts set aside out of profits. It has an appropriation of profit or accumulated profits to strengthen the financial position of the business. It is not a charge against profits. So here giving meaning of reserves. Reserve means the part of profit retained for any known or unknown contingency. liability or decrease in the value of assets. American Institute of Accounting views the use of the term reserve be limited to indicate that an undivided part of the assets is being held or retained for general specific reserve. Reserve is the appropriation of profit. It is called out of undistributed profit. The reserves are created for this purpose. First one is to meet unforeseen future uncertainties. Second one is to meet unknown liability or contingency. Third one is to meet prospective losses. Fourth one is to increase working capital. Fifth one is to strengthen the financial position. Sixth one is to facilitate the expansion of the business. Seventh one is for better financial and liquidity position. The certain of resource will enable the concern to the over a difficult financial period in future or causes pushback of profits, which is a cost and also a source of internal financing. And next one is reserve fund. If the reserves are invested in outside securities, then it is called reserve fund and not reserve. A company will invest the funds outside only if one is ready cash in necessary on a certain dates. Second one is the funds cannot be profitably invested in the business balance sheet itself. Whenever the company requires immediate cash, these investments in outside securities will be sold. These examples are sinking fund, dividend equalization fund. Now we are going to discuss about distinction between provisions and reserves. This is very important for JO aspect purpose. Basic of difference: provisions, reserves. Main object: provisions point of view, created for some specific objective. Reserves point of view, created for probable losses. Second one is use. It is unlisted for the object for which it is created. Reserves. It can be utilized to meet any future loss or liability. Third one is creation. Provisions point of view, even if there are no profits, it must be created. Reserve point of view, it can be created only when there are specific profits. Fourth point, necessity. Provisions point of view, it is made out of legal necessity. Reserve point of view, it is created as a matter of produce out of profits. Fifth point, charge. Provisions point of view, it is debited to profit and loss account. Reserve point of view, it is debited to profit and loss appropriation account. Sixth point, record in balance sheet. Provisions point of view, these are deducted from the items for whom these are created. Reserves point of view, they are shown on the liability side of the balance sheet. Seventh point, distribution. Provisions point of view, it cannot be used for distribution as profit or dividend. Reserves point of view, unlisted part can be distributed as dividend. Eighth point, transfer. Provisions point of view, it cannot be transferred to general reserve. Reserves point of view, a portion of amount can be transferred to provisions. Ninth point, investment. Provisions point of view, it is not invested. Reserve point of view, it is invested, may be outside of the business. Last 10th point, net profit effect. Provisions point of view, it reduces the net profits. Reserves point of view, it reduces divisible profits. All the best.